Using standard cost to compute variances is an effective method of controlling the cost of direct materials. To illustrate the computation of the price and quantity variances for direct materials, let's get into the boating business. We're going to manufacture a fishing boat. The standard costs for direct materials and direct labor costs for this fishing boat are shown here. The boat requires 100 board feet of wood and 40 board feet of fiberglass. The standard cost for wood is $10 per foot, and it's $5 per foot for fiberglass. In this topic, we're only going to examine materials variances. We will use this example as well when we get to analyzing labor variances in the next section. Now, the company manufactured 100 boats during the period in question and used the following direct materials to manufacture these boats: 10,150 board feet of wood at a cost of $9.60 per foot. Turns out the company also used 3,925 board feet of fiberglass at a cost of $5.20 per foot. Now, obviously, many different kinds of raw material are required to make boats. For simplicity, we assume only two materials are used. So how did the company do with regard to its use of materials? We can compute how much material the company should have used and how much material that should have cost, and compare that to what the company did use and what it did cost, as shown here. As we can see, the company spent more on wood than was expected. But is that it? Was the difference because we used more or less than expected, or because we paid more or less than expected, or was it a combination of the two? We can break the difference down into two components: price and quantity. The material's price variance reflects the extent to which the actual price varies from the standard price for the actual quantity of materials purchased or used. The price variance is computed by subtracting the actual price from the standard price and then multiplying the difference by the actual quantity purchased. In this case, the material's price variance for wood is computed as follows. The F indicates a favorable variance. The wood cost us less than we had expected. Doing the same computation for fiberglass results in a $785 unfavorable price variance, meaning that the fiberglass cost more than we had expected. Essentially, if the actual price is more than the expected price, then we have an unfavorable variance. And if the actual price is less than the expected price, then the variance is favorable. It then makes sense to multiply the difference between these two prices by the actual quantity in order to measure the total financial impact on the organization of paying a price or rate that was more or less than was expected. The standard quantity of materials should reflect the amount needed for each completed unit of product, but should allow for normal waste, spoilage, and other unavoidable inefficiencies. Now, the material's quantity variance compares the actual quantity of inputs to the standard quantity of inputs allowed for actual output. Note one important concept: quantity allowed for actual output. This concept refers to the quantity of materials that should have been used to produce the actual output. At the end of the period, the accountant will multiply the standard quantity of materials per boat by the actual volume of boats produced to determine the standard quantity allowed. This number is then compared to the actual quantity of wood used to determine if there is a favorable or an unfavorable quantity variance for materials. The accountant will multiply this variance by the standard price for wood in order to account for this variance in the accounting system as follows. In the case of wood, the computation would result in a $1,500 unfavorable variance. The unfavorable quantity variance for wood indicates that the company used more wood than expected. Doing the same thing for fiberglass results in a $375 favorable variance, with the F indicating that the company used less material than was expected. Now note that the two variances add up to the total difference computed earlier. The advantage in breaking down the total difference in its price and quantity components is that helps us determine who to speak to about the differences. Different people control the different variances. Now, we'll talk about controlling these variances in a later video once we discuss the labor variances.